The broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, everybody. It's Thursday, July 15th, 2021. And, thanks for taking the time out to come to this presentation. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. And today I'll be talking about how to profit from order flow. Order flow is something that not a lot of traders right now really understand, but it's a great tool for pretty much anybody that's involved in the markets to understand what's really happening in the market. So what we'll be covering today is how to get the most from order flow, how to see market nuances in the order flow, and how to discover trading opportunities other traders miss. Okay, and my goal is to show you how to use the freshest market generated information based on what is trading right now in the market, so you're ahead of all the other traders out there. And what that really means is you're making trading decisions based on what's being traded right now. It's not based on a moving average or VWAP, taking into account everything that's traded over the last hour or the last week or anything like that. You're making your trading decisions based on the freshest, best information available. It's like I live in the Midwest of the United States, and the price of gas everywhere has been going up, and I know that when it's time to buy gas, I need to know where the least expensive gas is available, right? And it's based on what the price of gas is right now, not what it was a week ago. And so I know where I'm going to go to get gas, because it's a big difference. I could go to a gas station; it's only 309 versus another gas station where it's 343. And I'm filling out my car 15 gallons. You know, I'll say that's a lot of money, but it's $7, $8, and you're doing it twice a week. That's 15, $20, $15 times how many cars over the course of a month, over the course of a year. It really starts to add up, and that's really what order flow is about, right? It's based about what's trading right now and how to get the most out of that information. Now, order flow is not the latest greatest fad in trading. A lot of people, they'll say, oh, order flow is it's just a fad. People, it's a buzzword. It's really not. One of the greatest books on trading that's available out there is Reminiscence of a Stock Operator, right? And it's about the trader back in the 1920s. Well, he was an order flow trader, and that's 100 years ago. So you could imagine, how people have used order flow for at least a century, okay, and even longer. So the training today is for serious traders that want to understand what's actually happening in the market, right? Because as a trader, you don't want to just be blindly taking buys and sells because your system says buy and sell. No, you want to understand why the market is acting the way it is, and that's how order flow is going to help you. Now, let me just preface this before we go really deep into order flow. Is it's not about finding every turning point in the market before it happens, right? It's about reading the market to find the opportunities that are so obvious that the trade is about as close to a sure thing as possible. Now, there are no sure things in trading or in life, but you see occurrences, you see activity happening in the market that have a very strong probability of continuing, right? It's basically what people are doing right now. And people will do the same thing over and over until they change their behavior and do something else. And as a trader, you want to take advantage of that. And traders who are unfamiliar with order flow think it's just a tool for traders, right? Like, oh, MACD is a tool, or RSI, a lot of these indicators are just tools, right? But it's not, right? Really, order flow is a whole tool set, right? The market is full of a lot of different nuances, and having just one tool isn't going to help you very much when the conditions in the market change. Because if you just have a screwdriver, but you're trying to bang in a nail, that screwdriver is not going to help you, right? So it's not one tool. It's really a combination of tools that is going to help you understand what's happening in the market. I mean, you can't loosen a bolt with a hammer. I mean, you could bang on it all you want, but it's really not going to do much. So why would you analyze the market with a particular tool when that tool is only useful for certain market conditions, right? You may have a great indicator, but it only works in trending markets. Well, what's going to happen when the market is consolidating? Well, it's not going to be very effective, right? You can't use the same tool in all market conditions, right? You're going to have periods where it works fantastic. You're going to have periods where it struggles, right? And as a trader, you really want to understand what's happening in the market. Now, I have a special bonus for those that stick around and are interested in order flow, right? If you stick around to the end, you're gonna get a copy of the book that I wrote on order flow. It's called Trading Order Flow, and it's a 150-page book. You're not gonna get a hardcover copy. You'll just get access to the download 150-page PDF. Okay, and really, this is, in my opinion, a no BS webinar, right? Because I want you to really understand the power of order flow. So order flow gets you as close as possible to what's happening in the market, right? You want to base your trades off of what's happening right now. And really what that means is, in the old days when there was a trading floor, right, like the CME and CBOT, people paid hundreds of thousands of dollars to be on the floor, to be a local, to see the flow of orders coming in and trade against it, and they made a lot of money, those guys, right? But they paid a lot of money to get access to that information. And as traders now, right, the barrier of entry has decreased dramatically, and the exchange puts out all that information to a trader. So if you're not using that information, you're really leaving a lot on the table. Now, order flow also allows you to gauge the tendency a market will continue in a direction, right? The new trading activity, which is the volume, is what's going to keep the markets moving in that direction, right? The laws of physics, an object in motion will stay in motion until it meets an opposing force. The same thing is happening in the market, right? A trend will continue until it ends, until it reaches an opposing force. A trend up will continue until it reaches resistance, right? And then it will often reverse. And as an order flow trader, you're going to have better, more complete information than 99% of the traders out there who are only looking at open, high, low, close, and maybe volume at times, right? So you can see what other traders are not paying attention to. So those of you, just really briefly, that are new to my presentations, who am I, right? Why should you listen to me? Okay, I mean, there's a lot of people out there that are putting themselves out. Oh, I'll teach you how to trade, et cetera, et cetera. Well, I've been a trader. I've been a trader since the 1990s. Okay, at a professional level. I'm not talking about someone trading, my own small account. I traded. I started on the CME floor as a runner, right? That's where you started back in the days, when there was a floor, when there was open outcry. You started. That's the bottom. Okay, then eventually I worked my way up. I left the floor when electronic trading started taking off, and I worked on the trading desk at Dean Witter overnight, trading Globex. Where that was the CME, Project A was CBOT, and NYMEX Access, as well as all the other exchanges. After Dean Witter, I joined the global macro futures trading desk at EDF Man, the big English trading company. They had an office in Chicago, and I spent a couple of years there. After that, I joined Commerzbank, right? What used to be about the second biggest bank in Germany, behind Deutsche Bank, as their licensed Eurex trader, right? I was one of only a handful of people that were able to trade Bunds, Babel, and Schatz in the U.S. on the trading terminal. And after that, I joined Cargill and became eventually the head of the futures trading desk. And they sent me out to Singapore to set up a trading desk, even when the pit closed in Singapore on Cymex, right? Because we needed a trading desk off the floor. And after that, I joined JP Morgan. I spent 8 years at JP Morgan, vice president of futures trading. Then after, I got married and we had our first daughter, I just couldn't take the corporate world anymore. And I left and I started up orderflows.com. I started writing my book and we released software. Okay. It's the Orderflows Trader 3.0 now and it works on NinjaTrader 8, right? The reason it was called Orderflows Trader 3.0 is because we've done already 3 major upgrades. We're on the 3rd major upgrade, actually. And the reason I talk about this is because, the charts you see in this presentation are generated from the Orderflows Trader software. Okay. So again, I want you to see how easily and quickly you can apply order flow analysis to your trading, right? So you can make better, more informed trades. Now, before we really dive in, just a brief disclaimer: trading involves risk, right? Risk capital is money that should not be that can be lost without jeopardizing one's financial security or lifestyle, right? Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Just basically, don't trade with your rent money, right? I know, when COVID hit, people really started trading, right? Stocks, cryptos, everything. And, a lot of times, there's people like, well, I got no more job. And it's sort of like a race against time. Okay. Don't put yourself in that position. Scared money is basically lost money. Be comfortable where you are financially before you start trading, because you don't want to have that extra burden on you. And, it's just not a good thing to get into when you start trading. So before we begin, I want you to understand where order flow comes from, right? And if you look at a normal bar chart, right, have you ever really thought about where the information from the chart comes from, right? You see the bars, right? The open, the highs, the lows, where it closes, right? The bar was up or down, or the candle was red or green. Well, it comes from the time and sales. Okay. Now, most traders think of order flow being the dome, right? This one here on the right, which shows the best bids and best offers. Well, that's working orders. Okay. Yes, technically, you could make an argument that, well, the dome is really the order flow. Well, yeah, it's orders, but they're not being executed. Okay. A lot of times, people put bids in, pull it. People work offers, they pull it as the market starts getting closer, right? It's one of those things where, if the market is 39, trading 39, yeah, I'd love to sell it at 41, but when it's trading 39, but the problem is, as it starts going up there, all of a sudden, selling at 41 doesn't look so good. People start pulling their offers. Okay, so the order book is constantly changing. Really, what you want to be focusing on is what's actually traded in the market, right? What's people's commitment. When a person gets into a trade and they're in a position, well, at some point they're going to have to get out of that position. Either they're going to make money or they're going to be losing money. Okay, so if they're losing money, it sort of, I don't say clouds their perception, but it makes them think again on really where they're going to get out at at the least amount of loss, or preferably the most amount of profit. Now, the problem with time and sales, as well as the dome, right, the depth of market, it just moves too fast. Right? It's very difficult to understand. Now, if you've ever been to a car race, Formula One, and you're there with your iPhone trying to take a picture of the car, the cars move so fast you can't take a picture. And that's what looking at the time and sales is like. It moves so fast you can't take a picture, right? Even the depth of market for many markets, E-minis, NASDAQ, it really moves too fast for you to really get a handle. Some markets it moves slower, which is easier to deal with, if you're doing trading treasuries or even currencies, and obviously the grains, it's more manageable. But if you're trading something like NASDAQ and even to a certain extent S&Ps, E-minis, it just moves too fast. You can't really make good trading decisions, right? You just can't, right? And the way I describe it is, it's like watching a Formula One, right? You see the cars, if you're way up in the stands, you see the cars on the track, but if you're up close and you're trying to take a picture, you can't, right? So what's the difference between time and sales and a bar chart? Well, a bar chart just shows the prices that are traded, right? It leads a trader to believe that all prices are equal, when in reality, not all prices are equal, right? Not every trade that happens is the same. And if you're looking at a bar chart, you don't know that it traded just, if it traded just one contract at 41, or if it traded 5,000 contracts at 41. Okay, so whether it trades one or 5,000, it doesn't matter to you. If you're looking at a bar chart or a candlestick chart, you just see, well, it traded 41. Whereas, time and sales is going to show you the price that traded and the volume that traded. And what a lot of people don't realize, it also shows you the side of the market that it traded. So what that means is, if there's a big offer, okay, say there's 5,000 on the offer at 41, and someone just comes in and buys all 5,000, right? If you're looking at a normal bar chart, you'll just see, oh, 41's traded. But if you're looking at time and sales, right, you'll see, wow, 5,000 traded. You had someone just aggressively go in and buy 5,000 contracts. Now, as a trader, that's very important information, something that you can use for, in your trading analysis, right? Because if normally 200 contracts trade, but all of a sudden someone just stepped right up and bought 5,000, it's going to make you think, okay, why are they buying 5,000? Maybe they know something, maybe they're not, but it leads you to the next step in your analysis. So what exactly is order flow and why is it important to traders? Well, most traders, like I said, just look at a market almost, two-dimensional, right? You just see, okay, well, it traded 39 and a half. The low is, 38 and three quarters. And we closed at 39 and a quarter. Okay. But order flow traders will see, well, okay, it's, the most of the volume occurred at 39 and a quarter. It did trade up to 39 and a half. There was some decent volume, but at 38 and three quarters, it traded 8 contracts. Okay. So it's very light. So, you can take it a step further. And what that means, when you see, well, it only traded 8 contracts. So it's telling you not a lot of selling interest down here, right? Much more interest sort of mid-bar, right? Which is where it should be. This is sort of a normal bar. But if you're looking at a normal candlestick chart, you can't make that differentiation, right? You can't see that volume. And the information that you see on your bar chart comes from the time and sales, right? But again, it leaves out the most important piece of information, which is volume. And more importantly, not just volume, but the volume that's traded on the bid and the volume that's traded on the offer. If you're looking at this chart, right, you'd be wondering, okay, well, what are we going to do, right? Market sold off, sort of just going sideways. It looks like we're going to start to rally, but, are we, or are we just still going sideways, or are we going to sell off again? It's very difficult to make a solid trading decision. But if you're looking at the order flow, well, you can see a lot of information beyond just where the market opened and closed in a bar. Now you're seeing, the aggressiveness of traders, either aggressive buying or aggressive selling. What volume is doing in a bar. Is the volume in a bar migrating higher or migrating lower? When you think of volume, you start to think of value, right? Where the most volume traded is generally going to be where everybody is happy to transact, right? And that sort of translates loosely into value, right? And in a bar, on a bar by bar basis, if the level where most people are happy to transact starts moving higher over next bar over next bar, that means people are accepting higher prices and are happy to take the market higher. So there's a plethora of information on a normal order flow chart. Okay, so while an order flow chart looks complicated, it's really not, right? And I was just having this conversation earlier with Anna about driving. It's when most of us had learned to drive, we've had no experience, right? When I learned to drive, the only experience I had driving was driving a tractor. Okay. And yeah, it's very similar, but obviously, in a tractor, if it bangs into something, it's not going to kill you. But, in a car, you crash into a light pole, there's a chance you could get killed. But once we started driving, we really became comfortable with it, right? Now we're all good drivers. We can sense that, we're driving down the road. We know there's a car in front of us to the left, a car to the right, a car in our behind us. So we're internalizing everything that's happening. And it's the same with order flow. When someone comes first to order flow and looks at a footprint chart, they think, my God, what is this mess? They see a lot of numbers and they're scared. But once they understand it, trading becomes easier for them, right? And the way I describe it is when I first started on the trading floor, I thought it was chaos, right? And most people, when they see the picture of the trading floor, it's chaos. I think that's why CNBC, they still love to take pictures of the trading floor and have people talk from the trading floor because it looks like so it's so busy, so chaotic. But it's really not. It's very organized. Who you're signaling to in the pits, everything is very organized. And the same thing with order flow. It's actually very organized once you understand what you're looking at. So again, average traders, they just look at a normal bar chart, right? They don't see what's happening in the market. They just see the price that traded. So take it a step further, right? And have software that's going to show you who's in control of the market. So where buyers are getting stronger or weaker, show you areas where the market is potentially reversing, and so much more. Advanced, oh, I don't want order flow traders view the market this way, but you could become more of an advanced order flow trader by having software that's going to show you areas where there's market generated support or resistance, or there's a lot of aggressive buying, or there's market rejection, and again, this is the Orderflow Trader software, and it's just telling you, in this bar, there's strong support in here. That's this green area. Strong support in here. That's this green area, right? As the market is going up, as the market's going up, you don't really think of support, but in order flow, that's an important concept, right? Of understanding that there's support coming into the market as the market's rallying, because as the market is rallying, you don't want to just see new higher prices being made. Of course you do, but you also want to see supportive buying coming in, people holding up the market as well. In case there's selling that's going to come in, it's going to hit that support that's in the market and it's going to stop, right? That support's going to hold up the market and then keep going up and up. So as the market is rallying, if you see market generated support come in, that's a good sign, right? As it's still going up, you see more market generated support, that's a good sign, right? And everybody always talks about, let your winners run and cut your losses short. And they really think that it's just about having a tight stop. It's not, that just gets you stopped out a lot more. It's about understanding what's happening in the market. So if conditions change, you could get out early. But if you're in a position, how are you going to let it run more if you can't read the market, right? If you understand that, yeah, I'm long, and then I see supportive buying coming in, that's a bullish sign. You could stay in the trade longer because now you have an area of support as the market's rallying, right? You have an area you can hide behind rather than just arbitrarily throwing in a take profit somewhere because, market's going up, right? But if you see that support coming in the market, you could feel more confident on letting your winning trade run. But again, if you're looking at a normal bar chart like this, right, you're coming down into the low, this red line is the low of the day, you're wondering what's the market going to do next, right? We just had that big bar down, then we went sideways, we started coming back down to it. But if you're looking at a footprint chart, an order flow chart, you're going to be able to see so much more information, right? You can see, okay, well, we came down within, a couple ticks of it, but now there's a lot of aggressive buying, right? You can see it's got nice positive, strong positive delta that's growing, right? You're seeing imbalances in the bar, right? You're seeing points of control move higher. So, if you can, I don't want to say safely buy this, but you could have a high confidence that, yeah, this low is going to hold and you could get long based on what's happening in the market. So, Orderflows Trader 3.0 software, or actually, it really takes the information you see in the time and sales and depth of market and puts it into an easy to read format, right? You really want to understand what's happening in the market. Now, this is a difference, okay? This chart versus this is a normal footprint chart that just shows, your delta, your imbalances, your points of control in the bar. This is an Orderflows Trader 3.0 chart. And down here, right, you're seeing the value area, right, of a bar, right? You're seeing highlighted points of controls that matter. You're seeing a bar highlighted that has a lot of imbalances as opposed to just, one or two imbalances. So you're seeing a lot of bullish activity coming in right off this low. So that's why I talk about, when you can take a high confidence trade that, this buying it off the low. Now, again, it's not trying to predict the low. You're really just reading the order flow, and the order flow is telling you, yeah, you know what, based off of what's coming into the market and trading in the market as opposed to what people are showing in the order book, you could make a more confident decision in your trading to get long, right? Because, the best place to buy with the most profit opportunity is off the low of the day. So if you have reasons that are valid to be buying off the low of the day, it's going to give you a great trading opportunity. Okay. And this is that low down here, right? And, if you're using moving averages, your average would sort of come down in here, your VWAP, you'd be looking around somewhere around 765. But the signs in the order flow are happening down here in the 30 area, the 35, 40 area, right? If you're getting long up in here at 65.70, well, you just missed this nice move up here. I mean, there was more to the move here, but really, order flow gets you into the trades quicker, right? Rather than waiting for your lagging indicator to trigger, right? You're based off, oh, okay, we're at the low, but I see what was happening in the order flow, and it's a great buying opportunity, okay, and to take advantage of it. So again, bar charts just show the price that traded, but that's just the starting point, right? Order flow chart shows the price traded and volume traded, but more importantly, the volume traded on the bid and the volume traded on the offer, okay? So again, what would you rather have? Just knowing, oh, I know where the high and the low of the bar is, where the bar opened and closed, or knowing exactly what the volume was that traded. Now, again, it's not about trying to analyze every single tick that comes through. What you're looking for is you're looking for those special instances where things are so clear, so dominant in the order flow, right? That it just, you just can't miss it, right? It's like so obvious. It just appears right before you, right? It's not about analyzing, well, 8 traded here against 61. What does that mean? And 71 against 1. What does that mean? No, it's like, okay, you'll see. I'll show you examples, of things that are just so obvious, just stick out so much that, to not take the trade, you'd be, you'll look back and say, God, that was so obvious. So markets trade in a two-way auction. Okay, there's a bid, which is the buyers, and there are offers, right, which are the sellers. And people who work bids and work offers are called passive traders. Now, for a trade to happen, a trader needs to either buy the offer or a trader needs to sell the bid. They need to cross the bid offer line. And when a trader does that, he's considered the aggressor. These are called aggressive traders. And order flow is going to help you understand what the passive traders are doing and what the aggressive traders are doing, right? Because you really want to be following what the big traders are doing, because they're the ones that have the money that are going to move the market. So if you see big aggressive traders coming into the market and you're going to try and fight them, well, 9 times out of 10 you're going to lose, right? The saying is in life, it applies to trading as well. If you can't beat them, join them, right? If you're not going to beat Goldman Sachs, so you might as well join what they're doing, right? Again, traders used to pay hundreds of thousands of dollars to be on the trading floor when there were, many trading floors all around the world. Now there's just, 1 or 2. And reason being, so they can see the order flow that's coming into the market, what people are trading. Now, again, time and sales gives you all that information, but it moves too fast, right? You can't make any sense of it. Now, in case you've ever wondered, why it's different colors, is because, if it's green or red, it's telling you what the aggressive traders are doing, right? It's not just saying, oh, in the old days, it used to just print the price, but now it shows, depending on the color, if it's red or orange in this case, it's someone that's selling the bid, right? Whereas if it's green, it's someone that's buying the offer. But you could take that information, all this information you're seeing traded here on this time and sales, you could put it into a nice, easy to read format, right? That's why, the people that created the footprint chart, were really, in my opinion, pioneers, right? Because it's like all this information that's out there, you take that and put it into an easy to read format, right? The footprint chart. And when you organize the data based on how it's traded, you have more data points to analyze, right? You have delta, which is the difference between aggressive buying and aggressive selling. You have points of control, right? Which is the difference between, the point of control is the price level in the bar with the most volume. And you have imbalances, right? Where aggressive buyers outnumber aggressive sellers by a fixed ratio. Usually it's 4 to 1, but you could use whatever you want, or vice versa. But why is this important? Is because it's going to give you more insight into what's happening right now in the market, right? Delta is generally negative as the market is selling off. You can see the negative deltas, right? Minus 54, minus 67, minus 221, minus 71, minus 31, minus 70, minus 50, minus 113. But as the market starts to rally, it's positive 159, 593, 45, 428, 209. Why? It's because as the market's selling off, you have people hitting the bid, aggressively. When the market's rallying, they're lifting the offer. That's why you have positive delta on moves up generally and negative delta on moves down. Now, the point of control is the price level in the bar with the most volume. No fancy calculation. It's just you take the volume traded on the bid at a price and the volume traded on the offer on the price. And if that price level has the most volume, that's what's considered the point of control. Okay, every bar is going to have one. And generally, as prices, as the market is moving down, point of control is going to migrate lower, 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 lower. Then as you go sideways, point of controls generally sort of line up, around the same area, not necessarily at the same level, but within one or two price levels. Usually, you see these two are same. This one's one tick higher. This one's about two ticks lower. But as the market starts going up, point of control starts moving higher, 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 higher. Okay, so that's because people are happy to transact at those higher levels as the market is moving up. Now, imbalances. All right, imbalances are a sign of aggressive trading, and you often see them in trends. Okay, and not every bar is going to have imbalances because again, it's based on what's happening in the two-way auction, and it's based on the volume. Right, it's a ratio, it's a percentage rather. 4-to-1. So as you can see here, this is a selling imbalance. It's 30 traded on the bid versus 5 on the offer. Here was 29 against 7. Generally, most of the volume is pretty evenly distributed in a bar, right? It's you will have more on a bid sometimes or more on the offer, but when it starts getting out of sort of the normal parameters, again, which is usually about 4-to-1, some people use 10-to-1, some people use 5-to-1, some people even use 3-to-1. Okay, when it starts moving away from sort of the normal 3-to-1, 2-to-1, 1-to-1 ratios, then you start considering that an imbalance. Okay, it's like a tug of war, right? You have people that are equal strength, but if you have 5 guys on one team and 30 guys on another, obviously the side with 30 guys is going to win, right? That's your imbalance there. And it's the same as markets move down, you generally see selling imbalances, which are the red numbers in a bar. As markets move up, you're seeing blue numbers in the bar, right? As opposed to the black numbers, it's just your normal order flow. Okay. Now again, just reiterate, drive the point home. Buying imbalances occur when what's traded on the offer is 4 times more than what's traded on the bid. Right. Selling imbalances is the opposite. When there's more traded on the bid than traded on the offer by 4-to-1. You can see 18 against 4, 27 against 0, 27 against 5, 28 against 5. Right. These red numbers are selling imbalances. These blue numbers are buying imbalances. The black numbers in the bar, that's just your normal order flow. Okay. Right. Just buying imbalances. Blue numbers in the bar. Right. Simple. Right. Keep it simple. Right? It's not about making trading complicated. It's about understanding what's happening in the market. So again, as the market's moving up, you're seeing the buying imbalances, buying imbalance, buying imbalances. As the market starts moving down a little bit, selling imbalances because aggressive, traders are aggressive. As the market's moving up, people want to get on board. They're aggressive. As the market hits a high, people, think, okay, now it's time to take profits. So they start hitting the bids, getting out, right? As the market goes sideways. Now, with imbalances, you also have this thing called stacked imbalances. So if you have 3 or more imbalances in a row, stacked neatly on top of each other. There's 1, 2, 3, 4, 5, 6 actually, but most people will start it at 3. Just look for 3 or more. That's that's something that's called a stacked imbalance, and it acts as support or resistance in the market. And if it's a stacked buying, it's support. If it's a stacked selling imbalance, it would be considered resistance, right? So selling imbalances, again, it's the red numbers in the bar, right? You can see in here 34 against 3, 19 against 3, 42 against 6, 86 against 14, right? As the markets move down, you generally see majority of selling imbalances. Now, that's not to say that there won't be buying imbalances on a move down, because there's always people trading, right? Two-way auctions. As the market's moving down, sometimes big traders say, "Oh, it's a great buying opportunity," or they want to take their profits or whatever. So that's why you do see some buying imbalances. But overall, on moves down, you're seeing the you're seeing the selling imbalances. Okay. Now, a stacked selling imbalance, again, is the opposite of a stacked buying imbalance. It's 3 or more selling imbalances stacked neatly on top of each other. And again, it's going to act as resistance, right? As you can see here, you got your stacked selling imbalance. And basically the cause of it is there's a big trader comes in, just hits all the bids, boom, boom, boom. right? Market comes back up, maybe they reappear, start selling some more, and the market continues down. So having all that order flow information is nice, right? But it helps you see how the market's traded. As a trader, you want to know how to use that information to take trades. That's the whole point, right? So you want to get the most out of order flow. There's a saying, right? We've all heard the saying, when life hands you lemons, you make lemonade, right? And in trading, it's a similar thought. The market hands you a lot of information. What are you going to do with it? Nothing. No, you use it to your advantage, right? You take advantage of all that information. And why wouldn't you use that information? To be honest, institutional traders, hedge funds, big traders are all using some aspects of order flow, right? In reality, there's an arms race going on at the institutional level to take all the information that's generated from the market and I don't say mine it, but find useful bits of information that they could put into their trading system, their algo, to take advantage of it, right? Because really, what order flow is, it's the most up-to-date information of what's happening in the market, right? Gone are the days of just relying on what price is doing. Sure, you can still trade price action, but why just limit yourself is what I'm saying is, expand your territory, so to speak, your repertoire on adding more information that's going to help you as a trader, right? Because that's really what you want to do, right? You want to know when the really big traders are active and busy in the market, right? The guys that sit around in the offices, pork bellies, from trading places, but like the big traders, when they're active in the market, you want to know so you can also participate. Either one, trade in the same direction, or two, get out of the way, right? You don't want to be standing in front of a a trader that's got 5,000 e-minis to buy over the next 15 minutes, because generally you're going to get run over. What causes markets to go up or down is the aggressive traders, right? For the most part, aggressive traders control the immediate direction of the market. So how can you see aggressive trading? Well, it appears in the time and sales, but who wants to look at the time and sales all day, right? The easiest way is to look for imbalances in the order flow. Now, you got to understand, markets have different conditions, right? You have normal market conditions and you have trending market conditions, or what I like to refer to it as flow-driven markets. In a normal rotating market, right, the order flow is normal, right? That's what's to be expected in a normal market. But in a flow-driven market, you see clues the big traders are active and moving the market. Here's a normal market condition. It's just going sideways. You've seen a little bit of aggressive buying, a little bit of aggressive selling. Delta is kind of neutral, so aggressive traders are pretty equal, right? Again, more normal market activity, just back and forth, right? Up, trading in a tight range. But when the market starts coming out of those ranges, what are you going to see? You're going to see sellers dominating if the market is selling off, right? What are you going to see? You're going to see a lot of selling imbalances. You're going to see a strong negative delta as the market's selling off, right? You want to know when the sellers are dominating or when the buyers are dominating, right? Here's buyers dominating as the market is shooting up off the lows of the day. Okay, sellers dominating, right? As the market is just falling off a cliff, boom, boom, boom. You're seeing a lot of selling imbalances. You're seeing stacked selling imbalances. You're seeing strong negative delta, very little aggressive buying happening, right? So, that's how order flow is really going to help you in that sense, right? It's going to tell you when the aggressive traders are active, right? And as the quicker you can pick it up, when the aggressive traders are active in the market, the better off your trading results are going to be. So market nuances, right? That's the beauty of order flow. It's going to help you see all these little market nuances, right? And, one of my favorite is the market sweep, right? Sweep the leg, Johnny. That's in the Karate Kid, right? That's what Kreese told Johnny on how to win the point. The next point is sweep the leg. And in the old days of when electronic trading first started out, there was a feature on the NYMEX COMEX system to sweep the market, right? Normally, you would just, if the market is 6 bid at 7, right, you just buy everything up to 9 or something, right? That would be a sweep. But they actually had a feature on the old system to sweep the market, so you could just enter your quantity and it would just sweep everything in there. And we used to joke, when someone was about to do a sweep, they're going to say, "Oh, I'm going to sweep the leg." But really, a sweep is, all it is when a trader takes out several price levels in one trade. Okay, so a buy sweep occurs when a trader buys everything up to a certain level, right? So in this case, right, the market is 41.25 bid at 25 and a quarter. Okay, so a trader's thinking, well, I think this market's going to higher, or they want to move the market higher, they're going to put an order in. They're just not going to buy the 25s and then see how it reacts, and then buy the 50s and then buy the three quarters. No, I think this market's going higher. I'm going to buy 300 right now up to 26, right? So they're going to instantly lift all these offers and turn it bid here. So it's going to be 26 bid at 26 and a quarter. That's a sweep, right? Basically, they're clearing out all the offers. Okay, so that's a buy sweep. Now, a sell sweep, is the opposite, right? It occurs when an aggressive seller comes in and thinks the market's going to go lower. So in this case, it's 25 and a quarter. But he's like, I think this market's going, I think this number is going to come in negative. I'm going to queue this up to sweep everything down to 24. So they'll put in sell 1,000 at 24, and they'll get this 96, the 121, the 153, the 200, the 241. And if they're not filled yet, they'll be working an offer at 24 here, right? And then sellers will come in and fill in these offers in here. Now, if there's a big iceberg in here, say someone's got 1,000 to buy here at 24 and three quarters, but only showing 100. If he comes in trying to sweep everything down to 24, it's only going to stop here at 24 and a quarter, because there's a big ice. If there was a big iceberg here, it would absorb his whole order. Okay. And again, that's another little nuances. Sometimes sweeps run into iceberg orders that are sitting in the book, because we don't know where iceberg orders are, right? Until it trades. You don't know if there's an iceberg order going to be refreshing until it starts to trade there. Now, for a sweep to be effective, right, and move the market, there needs to be a lack of resting liquidity, right? Or else the sweep is going to be absorbed. Like I said, if there's an iceberg order, if you're trying to sell everything down to 24, but there's a big iceberg here at 24 and three quarters, you're just going to sell everything into 24 and three quarters and be filled, and it's still going to be 24 and three quarter bid, right? And that, as a trader, is another nuance, right, that you can take advantage of. And again, on a normal candlestick or bar chart, you're not going to know where sweeps occur, right? On a footprint chart, if you know what to look for, right? Now, I know where there are sweeps on here. I can see there's probably a sweep right in here. Obviously, a sweep up here. But again, you have to know what to look for in the market and in the order flow. And that's why I do these trainings to sort of instruct you, right? So basically, what you're looking for is where price jumps several price levels with no counter trade. So if the market is trading 25 at 25 and a quarter, 90 on the bid, 20 on the offer, then all of a sudden you turn away, then you look back, all of a sudden it's 26 and a quarter. Oftentimes it's someone just came in and swept all these offers and turned it bid here, right? And if you're looking at a footprint chart, you can see where the sweeps are. Sweep here, sweep here, sweep here. Okay. And again, the reason why I talk about the Orderflows Trader software is because we have a function on there, a sweep detector, to highlight areas where sweeps occur in the market, right? If you're looking at a bar chart, you can't see that there was a sweep in here, right? You could guess that maybe there's a sweep in this big bar here, but you don't know for certain. You could sort of guess by looking at this chart, because, it's a big bar down, so there's a lot of aggressive selling. Maybe someone came in and swept the order book, but you don't know. On a footprint chart, if you know what to look for, yeah, you can see it. I know there's a sweep occurred here, but it's nice to have software that's going to show that to you. You have it right here. Now, sometimes, I'll be honest, sometimes stacked imbalances overlap sweeps, but not always. Right? So you can see actually the sweep was up here, right? If you're looking at stacked imbalances, you can see a stacked imbalance here, stacked imbalance here, right? Most order flow traders are taught to look for stacked imbalances. One here, one here. Okay. But if you're looking at sweeps, you can notice there was a sweep up here well before the stacked selling imbalance, right? So where would you rather be short from? Up in here at 6400, or short down here at 63.85 after the sweep occurred, right? Of course you'd want to be short from 64.00 where the first sweep occurred. And that's the real power of order flow. Is going to help you. That's just one little nuance. Now another thing I'll talk about is order flow sequencing. Okay, order flow sequencing occurs when the resting liquidity is stacked and taken out. Now, what do I mean by stacked? Okay, well, what I mean is subsequent higher amounts of volume on the offer or on the bids as you're going down on the bids or going up on the offer, right? Oftentimes, the book is not usually stacked neatly like this, right? It's often stacked like, 96 and then 121 and then, 100 and then back to 200 and then back to 185. But when big traders, right, when big traders are trying to work their way out of position, try to finesse their way out of a position, take profits, the market is, say the market had been selling off, okay, it's coming down to 25. They're saying, okay, just, I'm happy to get out now, just get me out, worst price 25. Okay, so, they'll work some 25s, they'll work more at 24.75, more at 24.5. Some at 24.25, some at 24, right? They'll stack their order book, right? They'll work subsequently higher amounts of bids. They're not going to just buy everything at 25. No, they're going to finesse it in there, trying to get a better fill. If they're happy to get out at 25, people will say, well, you just work everything at 25. Well, if institutional traders, they want everything better, right? They don't want just, it's worst price 25. You don't think that, okay, well, you're filled at 25. You're like, what? It's trading 24.5. I didn't get anything there. They'll yell at you and call you every curse word in the book. So what they do, is they work some at 25, a little more at 24.75 in case it starts ticking down, right? They're getting better fills, right? So then when the execution trader goes back to the trader, yeah, I bought you your 1,000, average is 24.6. Okay. Oh, okay, great. Thank you. Like that. So that's what a stacked order book looks like. But having a stacked order book is one thing, right? It has to trade that resting liquidity volume. Okay. Now, on a footprint chart, you can see it, right? But then you really got to analyze the chart, right? And I'll be honest, I don't like sitting there staring at all the numbers myself. That's why in the software, we created the order flow sequencing to tell me that there was, as this market's going up, you're seeing the sequencing occur, right? Bullish, the green happening on the offer. So subsequently, higher offers are being taken out. But then you get up here to sort of your inflection point, right, where the market turns. Now you're seeing the order flow sequencing, the bearish sequencing coming in after you hit a swing high, right, which is bearish, right? As the market's going up, yeah, that's what you like to see. But then as market goes down, right, you're starting to see the bearish sequencing, right? And it's a tool to help you keep you in a trade, right? What I was talking about earlier is letting your profits run, right? That's what these tools help you to do, right? If you're in a trade, say, well, I'm still long. Okay, so there's some bullish sequencing, bullish sequencing, bullish sequencing. Then you see the bearish order flow sequencing. Okay, that's a sign that you could probably start cutting your position, right? Then you see some more. Okay, you should cut out of it already. So let your software, right? That's why I talk about the Orderflows Trader software is we have this function in there to show you, to highlight that to you, right? And as you can see, right, as the market is going up, right before it takes off, you see the bullish sequencing coming in, right? You're still in the trade. Oh, there's some bullish sequencing still happening here. Yeah, I could let it run a bit. Uh-oh, bearish. Okay, so you start thinking of covering it now, okay? Again, bearish sequencing, boom, market sells off, hits that inflection point, the turning point, right? Where buying starts to come in, and you're seeing bullish sequencing, bullish sequencing, bullish sequencing as the market goes back up. Again, more sequencing, bullish sequencing here, 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 bearish, bullish, 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 bearish as the market right before it drops off, right? You see that bearish sequencing come in. It's an Apple chart, right? Boom, you hit the low of the day, bullish sequencing, right as the market starts moving back up. As you hit the high of the day, it looks like it's going sideways, but you're seeing the bearish sequencing right before the market sells off. JP Morgan, right? You're at your low of the day. Okay, bearish sequencing. That's what you expect to see. But now here you made a new low, but you're seeing bullish sequencing right before the market shoots straight up in a 45-degree line. Now on some markets, like Tesla, where sort of, there's a lot of space in between trades, it's not going to really be very effective because there's just not enough trades, right? Order flow looks at volume. So if you don't have a lot of volume, it's just not going to be very effective, right? You want stocks that, trading very tight bid offer, not 5-cent bid offers like, Tesla, 10 cents bid offers. Okay, so the last part I'm going to talk about is discovering trading opportunities that other traders miss. Okay, now the reason I talk about Orderflows Trader software in the beginning is because I want you to see how easy reading the order flow can be, to show you who's in control of the market, to be in sync with the market, right? Understand why the market stops and reverses. So we always, software is developed to help us in life, whether it's Windows, and even though people will argue Windows is helpful or not, but, tools like Microsoft Office is to help us, photo editing software is to help us. And trading software should be the same way. That's why I created the Orderflows Trader software 3.0, right? Because I want to see areas where there's market exhaustion, where there's market weakness, where there's support and resistance, where there's sweeping activity, where there's market imbalances. I want to see where the immediate value areas, where there's aggressive trading, and so much more. I mean, there's so much information out there available to a trader that, to not use it really has me scratching my head. Sometimes I talk to traders and they'll send me a chart and I'll be like, well, why did you buy here? Like, well, my moving average, this one crossed over that one. I'm like, okay, but where were the aggressive buyers? Were there aggressive buyers coming in? As it's one thing to use moving averages, you can, but if you use it in conjunction with order flow and you say, okay, yeah, I got aggressive buyers coming in, it's going to give you a more effective trade. So market exhaustion, really what is market exhaustion? Is when the last buyer has bought or the last seller has sold. And on an individual bar, you can see that, right? You can see where the last seller has sold in a bar, right? If there's going to be exhaustion in the bar or if it's just going to be normal order flow. And the order flows trader will highlight to you at the bottom of bars if there's signs of market exhaustion. You see this green area here, right? As you're coming down, there's market exhaustion here, right off this low, here, as the market's going up. Now you're seeing bullish sign, you're seeing bullish sequencing, seeing a bullish POC here, and then you're seeing market exhaustion. So these are all tools to help keep you in the trade longer. All right, here's another example of market exhaustion, right? As the market's going up, you're seeing the lower prices as the market is going up. A sign of, exhaustion is actually a sign of rejection. The lower prices are being rejected here, right? Just as the higher price, as the market hits the high, came off, starts to rally, this higher price right here on this move up is being rejected. Okay, market sells off a little bit. Now market starts moving higher. As you're going up, it keeps, makes that new high, tests the high, starts to come off, but those lower prices on the move up are being rejected, right? That's a bullish sign. Now, another thing I'll talk about is market weakness, right? And market weakness is a tremendous piece of information to a trader, right? It's like your fuel gauge on your car, right? Do I still have gas or do I need to refill gas, right? And think of it like a move. Is a move running out of gas or not? Basically, is a move higher running out of gas going up, or is a move down running out of gas as it's going down, right? So there are two types of market weakness. There's bearish market weakness, and it occurs when the market has been moving higher but can't sustain the move any higher. The buying, and why not? It's because the buying is weakening. Now, bullish market weakness is kind of an oxymoron. You don't think of bullish being weak, but really what it is, it's the market has been going lower and lower, but the selling is getting weaker and weaker, right? The selling just sort of starts tapering off, and it eventually is exhausted, right? The selling is weakening. So how can you see it? Well, bullish market weakness, again, watch the delta, okay? Because the selling is weakening. What is happening in the delta, right? Is it getting stronger? Is it getting weaker? Is it doing nothing? Right? The market has been going down, but the sellers are getting less and less until finally the buyers take control of the market. And bearish market weakness is the opposite, right? A market has been going up and up, but the buying is weakening until there's no more aggressive buyers, right? And if there's no more aggressive buyers in the market, what's going to happen to the market? Well, there's no one lifting the offers, right? So the market's not going to go any higher. So watch the deltas, right? Is the aggressive buying getting stronger or weaker as the market keeps going up? So here's a sign of market weakness, right? Market went up off the low. This red line is the low, then just sort of went sideways, right? But it's not sustaining that move, right? Even though we have some bullish signs here in the market, which is good, right? You're thinking, well, this market can go up. But if you're watching the delta, you're seeing the deltas, the aggressive selling, or sorry, the aggressive buying is getting weaker, right? 400 delta, 300, right? 27. That's not a good sign, right? For this market to be moving up, keep moving up, it's got to be stronger delta, it's got to go 400, 600, 600, instead it's getting weaker, right? It's gone from 400, so you have 400 more aggressive buyers than sellers, to only 300, and then 27, might as well be zero, basically, it's very weak. Then obviously aggressive selling comes in and the market sells off and starts making new lows. Now here's a bullish market weakness, right? Market's selling off nicely, right? Boom, boom, boom. You get down here, but the selling is getting weaker, right? It's gone 58, minus 3, 75, minus 42, minus 39. It's getting weaker as the market is going down. And then it turns buyers, right? Buyers step up and you're seeing aggressive buying come in, 46, 7, 8, 23, 14, right? But having software that's going to highlight that to you, like this blue arrow or this orange arrow, is just going to make your trading life so much easier. Now, the next one I'll talk about is imbalances, right? But not just, I talked about general imbalances before. I talked about stacked imbalances, but what I want to talk about now is multiple imbalances, okay? And it's like having I've got kids, right? And everybody wants equal amounts of stuff, It's like one kid gets two toys, the other kid's only got one. Well, why does she get two? I only got one. I want another one. And there's imbalances, right? I mean, even though there's trade happening left and right, is it balanced or is it out of balance? Okay. Now, stacked imbalance, imbalances is when you have one imbalance, obviously, between the bid and the offer. Stacked imbalance is when you have three or more imbalances stacked on top of each other neatly, right? Now, multiple imbalances is when you have three or more imbalances spread out through the bar, okay? So you can see here's 1, 2, 3, 4, 5, 6, okay? The Orderflows Trader software puts a nice box around it, okay? And it's not just about trading every bar that has multiple imbalances, right? Use your brain. I hated that. I had a boss that would always say that. Use your brain. It would always be like, I am. But, really what he's saying is think about what you're seeing, right? You're coming into a low, you're seeing multiple imbalances. That's what you expect to see. You're at your low, but now you're seeing multiple buying imbalances. What do you think? That's a good sign or a bad sign? Well, that's a very strong sign. It's telling you the aggressive buyers are appearing at the low of the day, right? That's going to give you a nice trading opportunity. When people talk about trading in context, that's what trading in context means. Okay. Again, you're taking out the highs. You're seeing buying imbalances. That's where you expect to see buying imbalances appear, when you're taking out the highs. But once you hit the high and you start coming off, if you see multiple selling imbalances, 1, 2, 3, then you know that, hey, aggressive sellers are coming in here. They think that this is a good area to sell, right? Over here, you've got multiple selling imbalances. Okay, fine. But really, the bar to be trading it off of is this one, right? Closer to the high of the day. That's this green line. Again, take it in market context, right? You want to be selling after, the market sold off from 75 down to 70? Or do you want to be taking it right after the market made that new high and you see the aggressive sellers coming in? So I talk about when I say order flow gets you as close to the market, gives you the freshest information out there. Now, The next part I want to talk about is value area, right? And value area, if you're familiar with market profile, volume profile, the value area of the profile is where 70% of the volume occurs in the trading day, right? And you can actually break it down on a bar by bar basis. Now, think about it, value, right? A lot of traders don't trade around value. They don't recognize where the value is. But it's like buying a house, okay? And it's a crazy market right now, okay? And people buy a house, sometimes they're paying over the valuation, right? They're paying more than the house is worth. Well, as a trader, you don't want to be paying more than the house is worth. I mean, obviously, unless you need a place to stay, unless you're so aggressive, right? That I need this house. I love this house for whatever reason. I need a house. So I don't want to miss out. So I'm going to give more. But generally, the way most people do, like you watch House Hunters or these shows on TV that make house hunting so easy. Like, oh, you look at 3 houses, go eat an ice cream, put a bid in 20,000 below the offering price and buy it, right? It doesn't work that way. Really, what you want to do ideally is buy the house below value or as close to value without going over it, right? And as traders, you should always be cognizant of where the value is in the market, and you could break it down on a bar by bar basis. Okay, and the Orderflows Trader software does that. It puts a box in the bar where the value area is, and it really opens up a whole form of analysis, right? Because now you can see gaps in the value, right? As the market starts trending, you're going to see gaps. Like in this case, you're trending down. You're seeing gaps in the value between this bar and this bar, gaps in value between this bar and this bar, right? As the market is moving lower, right? As the market's moving higher, you're going to see gaps like this, but then you don't see anything. You just see overlapping value. When you see value overlapping, it's a sign of a sideways market, right? Then you're going to look for those breakaway gaps here, as the market starts selling off. Then, of course, you could add in things like sequencing, things like multiple imbalances, etc. And it's going to it really just puts you over the top as a trader, right? Gets you to the top of Mount Everest. Now, even with value areas, there's certain value areas that are even more bullish or bearish than other ones. And that's where having good software to highlight that to you, like this, in this case, this is a very bearish value area. It colors it this red color, so you can take advantage of that, right? You can get short, right, to take advantage of this move down. Again, value areas, right? If every bar has a value area, but some value areas are going to be more bullish or bearish than others, right? And having software that's going to highlight that to you, it's going to just put you ahead of everybody else, right? You can see this is those blue color value area is very bullish. Now, there's so much more information available from Orderflow that traders even realize, right? Unfortunately, there's not enough time to discuss it all today. I've gone over an hour already, and I could really go on all day long. So, the one thing I want you to keep in mind is don't just trade the market blindly. Trade it in context of what's happening at all times, right? You just can't trade anything blindly, right? You put things in context, right? And a plain old footprint chart with your imbalances, with your point of control, with your delta is a great place to start, right? A lot of trading platforms give you a footprint chart, right? And if you really want to learn how to use a footprint chart, go to my YouTube channel. I've got tons of videos on how to read a plain footprint chart. It's very helpful. Even if you just learn one or two things today, that you could apply to your footprint chart, that's great. But why just limit yourself to that, right? Why not get software that's going to take that information you're seeing on your footprint chart and highlight certain things to you, highlight market weakness, highlight support and resistance, highlight sweeping activity, highlight market imbalance, highlight value areas, highlight aggressive trading, and so much more, right? Take that information that you see on the time and sales and put it into your brain, right? In an easy to use format, right? Don't make trading more difficult than it has to be. Make it easier, right? And that's where having software is going to help you. It's going to put you so far ahead of everybody else. Now, there's two ways to do things, right? The easy way, the hard way. Which do you prefer? Well, I prefer the path of least resistance. I let the computer show me what's happening in the market. That's why I created orderflows.com, is the software, right? It was a software I created to make my own trading easier. But then I started talking to people and they're seeing it, they're like, hey, can you sell it to me? I'm like, well, at first that really wasn't my intention. My intention was just to improve the software that I had, right? To make my trading a lot easier. So in this past hour, hopefully you'll agree it's been time that's been well spent. But again, I can't cover everything in a 60-minute training session, right? But I got a special offer for you. So you get everything you need to know about order flow. And if you act fast, I'm gonna give you a very special deal, right? Because again, I appreciate the time that you've taken for watching this presentation. So you're going to be thrilled, right? I hope you'll be thrilled, right? Because this is a great deal, right? You're going to get the Orderflows Trader software 3.0. It's for NinjaTrader 8. Okay, now it will work on the free version of NinjaTrader. It'll work on the paid version of NinjaTrader. So for example, if you have a trading platform from another broker, like say you're using AMP, and you have Sierra Chart, but you want to use the Orderflows Trader software, you can get my software, get the free version of NinjaTrader, install my software on it. You just need a data feed, of course, a real-time data feed. And you could use it as a charting platform and just execute your trades on another platform. Okay, so for example, I trade markets overseas, but I get data from the data provider and I just execute on a broker's front end. Okay. And what the Orderflows Trader 3.0 is, it's the volume footprint chart with 17 pre-programmed order flow tools. And I talked about a few: market sweep, market weakness, obviously imbalance, value area, etc. But you get 17 pre-programmed order flow tools in there. And it's very easy to set up, right? You don't need templates, anything, right? I even explained it to you how to set it up, right? It really just takes a couple of minutes to set everything up. Normally I sell it for $8.99 on my website. You can go there right now and buy it for $8.99. And really what the Orderflows Trader 3.0 is takes everything that you see or everything that's happening in the order flow and puts it into a program so you can see what the institutional traders are doing in the market, right? It's like hooking my brain up to the computer, right? But having the software is one thing, right? You need to know how to use it. And I've bought software and it's really difficult to understand how to use it sometimes. It's like you feel like you need to understand programming in order to know how to use it. And I don't like that, right? I want to I want something easy. And that was a big thing with me because, yeah, I'm very computer literate, but I'm not a programmer. And I wanted something that was easy to use, right? And I understand order flow, but I know you on the other end of this presentation, you may be new to order flow, okay? And I want to make the learning curve as short as possible. So I give you a lot of education on how to trade with the order flow. I'll give you access for free to my order flow trading course, right? It's a 20 lesson course. It's about 15 hours of video instruction. And it's a great starting point for learning order flow, right? And normally I sell this for $297 on my website. You're going to get it for free today. But more importantly, today's training is more for advanced traders. And if you take advantage of this deal, you're going to get access to my Inner Circle video series, which is 56 videos on advanced order flow. I don't want to use the term tricks, but tips, nuances, and analysis. It's a great way to expand your order flow knowledge. So you start adding it up. The software, the training, the Inner Circle video series, it's close to $1,700, $1,693. But it's one thing to learn from videos and books. It takes discipline, it takes commitment. But what I found very helpful to traders is live training, right? Where you can ask questions, right? It's sort of it's not one-on-one, but it's a group, right? And for the last over 2 years now, I've been hosting live user training sessions for all users to join, where I drive home what I saw in the order flow the past week. You can ask questions about areas you were struggling with your order flow, even questions about the software. I can help you out there. And I do it every Tuesday night between 7 p.m. and 8 p.m. Central Time. There's an archive, so if you can't watch or attend, you can watch the replay. There's over 120 episodes in there, right? And some of these gurus out there, they want to charge you extra on how to use their software and what to look for. But I give you this for free, right? I I don't understand why, people sell you software, then they want to sell you on how to use it, right? That should be part of the cost, right? I mean, I hate that, but that's how some people are. So you add all that up, it's almost $2,000, right? It's 1893. I mean, I honestly I can't even put a price on the live weekly training. I just put it down as 200 because I've seen other vendors out there selling it for $200 a month, right? And it's just crazy. But it's just a one-time payment of $749. There's no monthly recurring payments or any other payment in the future. Now you will have to pay, your data fees. That's a monthly fee. It doesn't go to me, it goes to the data provider, and obviously your NinjaTrader fee if you're going to use a paid version of NinjaTrader. But it's just a one-time payment. I hate these things where, they like, well, we're going to charge you $99 a month, and then you're basically going to be paying it for the rest of your life. You try to cancel it, and you just can't cancel it, right? It's one of those things where like you got to cancel your credit card in order to cancel your payments, right? And I hate that, right? So that's why it's just a one-time payment, right? But there's a lot of users out there that are saying great things about this Orderflow Trader software, right? I mean, Sheila says, your Orderflows Trader software is remarkably helpful because I can clearly see now what's really happening in the market. For example, who's in control of the market on a very specific time and who's getting weaker as well, right? And then, other comments, it's really, if you really want to trade properly and understand what on earth is happening in any markets, Orderflow is the path forward. And with Mike's experience and explanation, it clicks. So what you do, I put the link in the chat already. Go to orderflows.com/oft3.html. Scroll down this page. Okay, this is what it looks like. There's a videos, introduction video. Scroll down that page. There's a button here. Click this button. Get started, right? Again, orderflows.com/oft3.html. Takes you to PayPal. PayPal processes your payment. I mean, everyone should be familiar with PayPal. If you've ever bought anything online in the last 20 years, you're familiar with PayPal. And it's just very easy to get started, right? A one-time payment of $749. So right now, you've got several options, right? First option is do nothing right now and stay where you are. Okay, then a year from now, you could watch another one of my presentations or videos and realize I just wasted a year of my life trying to do things my way and gone nowhere. Or you can take what you've learned in the presentation today and go out there and try to do it on your own. Nothing wrong with that. Trial and error is a great way to learn, okay? But you may not realize that what you're doing is incorrect, right? You're putting the cart before the horse, okay? Maybe you'll see some results, maybe you won't, but that's fine. I mean, again, there's nothing wrong with doing it on your own, okay? Or the easiest way, take my hand and allow us to walk you step by step through each part of the process and skip the trial and error. If you do the work, you can see as your life and trading transform right before your eyes. Put the ball in the back of the net. We just had there was just the Euro Championships. We sort of joke, England lost on penalty kicks, and the joke was, well, if I was England, I'd just kick the ball in the back of the net. But it's not always easy that way, right? You need sometimes someone to help get the ball in the back of the net. So choose which option is best for you. Option 1, do nothing. Option 2, try to do it yourself. Maybe you got some success, maybe not. Or option 3, let me in particular help you, with your order flow trading. But really you have to figure out what motivates you in life. Do you really want to become a better trader, or is trading just something you want to do in the part-time? Hopefully you want to become a successful trader because it really opens up the doors for you. This is me and my family. That's what motivates me. And for me, what motivates me is freedom. Okay. Trading gives me that freedom. It gives me to say, you know what, like last year during the lockdown, I want to go on vacation. I'm tired of living where we are, you can't go out of the store unless you're all wearing masks and everything. And so we're like, well, where can we go in the US? Well, South Dakota, right? We go there. So we just piled into the car, drove out to South Dakota, right? If you're working a job, something, it doesn't, you don't have that freedom. You work for somebody, okay? Freedom to do what you want, where you want. Or sometimes, it's just do nothing, just sit on a beach and veg out and do nothing. That's what trading, the opportunity it gives you, right? It gives you that opportunity to do what you want, right? And for me, that's freedom. So figure out, what's important to you. And for me, it's my family. It's freedom to do what I want when I want, and that's what motivates me. Now, as a special bonus, right, for Investors Expo, right, for Anna for setting this up for me today, I will give you access. If you take advantage of the special package, you'll get access to the order flow playbook as well, which is normally $297, right? And in it, it's a short course on order flow. There's probably about a dozen extra trade setups in there, things that you can look for in the order flow. And you're going to get access to that for free when you take advantage of this Orderflows Trader 3.0 package, right? Again, what you're going to get now is the Orderflows Trader 3.0, the Orderflow Trading course, the Inner Circle video series. You get access to the live group training as well as those replays, and you're going to get access to the Orderflow playbook. And it's just a one-time payment of $749. Now, if you stuck around to the end and you want my book on trading order flow, just go to this page, orderflows.com/book.html. You'll have to enter your name and email address and click submit, and it'll take you to the download page for the download of the book, right? Again, you're not going to get the hardcover copy. You're just going to get a digital download that you could, download to your phone, your iPad, your tablet, whatever, your computer, print it up, or just read it, on your iPad. So again, get started. Go to orderflows.com/oft3.html, and I'll end it there. There's so much information in the order flow that's available to a trader, right? It really makes no sense for you not to use the order flow. People say, what's the one piece of advice you could give me, as a beginning trader, Mike? What's the one piece of advice? Is understand what's happening in the market, right? If you don't understand what's happening in the market, you're going to struggle as a trader, right? You're going to be swimming against the current, so to speak, by not understanding what flows, so to speak, are happening in the market. Is there aggressive buying or is there aggressive selling, right? You want to be taking advantage of the aggressive buying that's occurring. You want to be taking advantage of the aggressive selling. If there's passive selling, right, how can you take advantage of it? How can you see it, more importantly? And that's what the order flow is going to help you understand. So again, to get started, go to orderflows.com/oft3.html. Make sure you put the .html on the end and get started, right? Because really, the old Chinese saying, when's the best time to plant a tree? It's 20 years ago. And the second best time is right now, right? So you don't want to waste any more time, right? We were all on lockdown for a year. Some people are still on lockdown. I got family that live overseas, and the countries they're in, they're still on lockdown. And I'm like, well, what have you done to improve yourself? Well, I've stayed inside and done this, but they haven't really done any self-improvement, right? And really what the order flows package is about is not just software to help your trading, but improve you as a trader. Okay. So again, thank you for coming to this presentation today. And I hope to see you guys all on the inside. So bye-bye, everybody.